Okay guys, can you hear me loud and clear? Ready to go? Welcome to TradeSetup in the live stream for the, what are we getting, 29th of June. So we're getting on the end of the month, end of the financial year. So we could see a bit of nice action in the markets coming soon, the next day or so. What's we only got left tomorrow, haven't we? So Paul, how you going? I hope we're having a good couple of days. It's been a bit choppy over in the US, and our market's been a bit jumpy as well. So I had a big night in the US last night, and that dragged us the ASX200 higher overnight, and we've opened up about, I think we opened up about 35 or so. So we'll take a look at that, and it looks like the squeeze could be coming back on in the US. So the short sellers, I think a couple of days ago or a day ago, were looking quite good and would have been quite happy with themselves, but then it's turned around and walloped them last night, and the market's just spiked higher. It's I think it pretty much made back all the losses on the S&P plus a little bit more. So that's really putting the pressure on the shorts again and could be squeezing them out over the next few days. We'll see how that goes. We'll have a bit of a talk about that. We've got a couple of things to cover today. Paul, I've got your email on, was it BTT alert? We'll just go through that just to explain the rationale behind that, which I think you probably find quite interesting. I'd expect you would anyway if you don't. Too bad. Then we've got AFY was an alert we had. We still got it. But what's happened, they have merged, they've come into an arrangement with, oh, now I forget the company, whatever the company was, and they're coming under another code, and that's as of today under APT. So anyone that's holding AFY, it's a one-for-one basis. Now you're looking at APT, and I think that's got today, tomorrow, it's on a deferred basis, and then what do we? I think it's on the 6th now, a week. So it goes through next week the same, and then I think it kicks off properly on Monday, I've got to remember, the 6th or 7th of July. So that'd be interesting. It's looking around the same price. They should expect it to be the same, around that 275 mark, the same as AFY. Now, if that can kick on, obviously after what they've gone through, that should be nice. We've taken a partial on that anyway, so each way it's going to be turned out quite nicely. And we'll go through, we've got a SHL as another comment from somebody else just to take a look at that. That's a trade we've got going, so we'll take a look at that one and just explain whether or not it's worthwhile getting it now. It's in the blue skies, but you know, I think we've got reasoning behind that. We'll just take a look at that. And also just want to talk about, I think, a few things. We've talked about the technical side of it before. Continuation trades versus complex corrections. You know, on different time frames, they might look similar, but you just got to take note what you're looking at. And this is where we talk about higher lows, lower highs, all that sorts of stuff. And when they come into play, and what you could be looking at, what sort of market bias you should be looking at, or scenario, and try to work just look at a couple of differences between the two. All right, well, let's get into it. I'll chuck it over now. I can hear my daughter on the phone, and she's what do you call it? Not Facebooking someone, FaceTiming someone. She FaceTimed her grandpa yesterday, who was driving the car and actually picked it up. So that was interesting. So I don't know who she's talking to now. Probably Poppy again. I think she can see his face on there, so she thinks it's great. She can talk to him. All right. Now the market's, what do you got now? 45. So we kicked on a bit stronger today. It's looking quite good. We'll look at the XJO to start with. I don't want to really get rid of that, do I? We'll look at that. Now, what is it? XJO. So you can see that's looking a bit more positive now. We're on the daily. If you look at the weekly, well, that's probably everything. That it's starting to get extended, like we said. It's up into that key resistance area at 6,000. It's getting up there. So we're looking really for a zone where it could just continue higher, and that's where you're dropping it down to the dailies. And we've had that pretty much the last key levels at that 50-50, pushed up, higher highs, higher lows, stalled a bit here, pushed up to the high, had to back off a bit. So you got a key level down at 5,600. And this minor inside level, which was just broken, has been tested a few times at 56.75, I think. But in that zone is holding up just below 57, say 56.50 to 57, holding up quite nicely. And we've got, so this is what we're looking at. You've got this move down recently, lower lows, lower highs. So that's correction or corrective action of this move up. and then you've washed out the support level at 56.75, popped up through that 58. So that's led us to believe that, okay, this move down is starting to break. It's going to fail. It's going to head higher. I like it when I turn around to see a funny comment. BSL, it's going great guns. Now, I hope you're still holding it, holding strong, Paul. It's looking good. You've got good areas to place your stops now too, if you wanted to just start locking it all in, or if you're going to ride it out. Now so this one's popped up. It's broke through 58, like we said. But it's made that lower high a few days ago, about a week or so ago, and then got smashed back down to that support zone. But it failed up there as well, and it's just popped up, built a little. It had a bit of a washout again of 57. You can see, and we just go here, and that's at that point there. And it's starting to head high. The last couple of days have been quite good. So we'll have to see what happens when it gets up to 58.40, or whether we're just going to get this bouncing around action. But all in all, it's starting to look quite good. What I'd like to see is it, say, retest up towards this 58.50, the previous highs. Maybe wash it out, pull back, build another high low, and then go. And then I think you'll be targeting above 50, 59, well, up to 6,000 on that last sort of ditched effort to push up there. Then it'll be interesting to see what happens from there. No, great. It actually looks really, really good, BSL. So, no, good on you. It's great. Now let's go to the I can't remember what it's called now. S&P. There we go. See what's happening there. Look, it's still going strong. The S&P. It's had a big move down, and it popped up yesterday, and it's just taken out the highs from the night before, the previous down move. But it's still got a level to contend with up towards 24.50, just above that. So we might see that squeeze start to play out again. I don't know if it's going to be like this type of action. It's just bounced, pushed down, smashed a few people, and then bounced straight back. I can just head high day after day. I don't know whether we see something like this, more of a higher low. That'd be interesting if we see that. I think that's a solid move. It's a stronger move. It might lead to better price action higher. We'll see how that plays out. We've got the FTSE's not doing a hell of a lot. So this is the Dow. Dow's looking good. I don't mind that move. Green candle, if you get it just taken out. Same sort of scenario. That minor lower high there at, say, 21.50, 500. You could probably barely see that. Is that right? It's this key level on the Dow we're sort of looking at, just above 21,500. Pretty much the same as the S&P after this big washout down a couple of days ago. Now the FTSE that's probably grinding. It looks like it's rolling over, so you're sort of getting that level around that, just below 74. It could wash that out and then pop back up. We'll have to see how the price action goes. The key level is way down at 71, so it's a few hundred points in that, where of that move up from 71 up to 76, 500-point move, you get a bit of contraction here. And this is what we call a complex correction, which we'll talk about in a minute. You get lower highs, lower lows, and then you start to get a zone where buyers step in again and start to pick it up and lift it and push it back up again. We'll see how that plays out. Now, good old DAX. That's Jakarta. We won't worry about that one. The DAX, a bit of the same in the FTSE. It's sort of down towards a key level support zone. We'll see how that goes. All right, let's get on to the two we'll start with is BTT and then SHL. Well, let's just quickly, we'll just whip over the alerts we've got running. So AFY, that was one. We're going to see APT. So APT's bid 261 to 270. So it's roughly where AFY closed. I don't think much action is going to be on that for a couple of days. We'll just see how that goes. Then we've got BXP was a new one from the other day. I don't know if when we're talking about it Monday, it might have ticked off. Monday. Then we got a short on. No, this is a short. So this is looking good. This is Dav's favourite. He thinks it's his, but I reckon it's mine. If you're listening, Dav. So that's a short play. You can see it sort of bounced around. It was struggling up to us at 10.75. Then you've got this move down, washing out the previous lows through, it was around 10.25. Pop back up, and that's the ideal lower high that we always talk about, and that's showing weakness. So if it's going to be strong, that should have just kept going. But when you get the lower high starting to roll over, confirmation through 10, that's confirmation there's no buying around at the moment. Well, little buying, and the sellers are starting to really take control and just wanting to get out of long positions, or anyone that's bought it through here, bought it up here, on those continuation trades, there's little pullbacks, or they've been holding it for a while and looking as the last-ditched effort to maybe make a comeback. It's just not working, so yeah, no, it's good, isn't it? I like AFY. I reckon it's a good one. Yeah, so this is a short. That's a new one that we've got on. That's looking good. BTT, that was the one. This is what we're going to talk about. So, we'll just talk about that in just a tick. That was an inside trade, so breakthrough 12. That's looking good. So we're looking for it to just continue up to 13 and beyond, really. If we get down to a weekly chart, that weekly is looking nice and strong. If you get through 13, bang, I think it's on for young and old. And we'll show you why we like that one, why we like it further. And we'll talk about the reasoning behind it too, Paul, for you. What else we got? I just got to make sure I'm not missing IMD. Thinking about taking some off the table there. A partial, it's just struggling, but it still looks good. I just like this action. This could turn into a lower high and then be a deeper correction, and then it rolls back up again and targets these highs. It's just looking like it's getting a bit, we get on the weekly, it's getting a bit overboard up here, right into that resistance zone. But I do like the most recent price action. This type of price action where it's just holding these highs just below that breakout, around 75, I think it's not a bad sign at all. So if we can hold that, if we can push up through 72, at least finish up there today. Just traded a touch above 72 just recently today. Hold above 70, push up through 72, get up to 73, hopefully today would be nice. Then I think that's going to be on. That's going to be at least targeting through 74, 75, maybe into new highs in the next few days. Just a bit of a continuation trade, an extension of that that trend high. You can see this move up. It's looking great. What else? We got Linus. We're going to get caught around that 10 to 10.5 mark. For anyone that doesn't know, when you got below 10, they go in increments of 0.01. Is that right? So they go, say, from 8 to 8.1 to 8.2 and so on. Then they hit 9.5 to 9.6, 7, 8, 9. They hit 10. Then they go to half-cent increments to 10.5, 11. So you get a lot of people bang around, but up above and below 10. They buy in at around 9.8, 9.7, pop it up, even between, you get 10.2 on a match, or 10.5 or 10, you're still getting a nice little profit there. So they tend to play it a bit around these zones, but that technically still doesn't look too bad at all. The weekly looks good, holding higher lows, popped up to 15 recently, 14. So I'm looking for that extension up, just holding below this, this higher low up here, just around 9 to just extend higher. We'll see how that one goes. Last but not least, I think is SHL, if I remember correctly. Have we missed anything? Linus, Telstra, we've got a short on too. We'll look at that. It popped up today, but it's been sold down just the last hour or so, from about 438 on Telstra. So this one is, what have we got? SHL, that's going to clear sky, so that's looking great. The weekly looks really nice. Pop up, complex correction down, holding higher lows, another just through the highs, had to pull back. It's just washed out those previous highs, pull back. This ideal structure is beautiful, and then we get an extension. I want to get it up to 25 and above, hopefully. Have we taken a partial on that one? Yep, taken a partial on that one. Only 4.6%, so it's up about 7% at the moment for us. See if that one can kick on. We'll talk about that one too. And the last one, like I said, is Telstra. That's short. It's maybe we might have picked the low, which would be interesting. But our risk is not much at all. We might even move the risk down soon. If we can't get back down through, 430 is what, if you can see that, 430, that low is really what we're targeting through there. And even down to 4, we are targeting down to 4, but we want to get it through there. If it doesn't happen soon, we might start, popping up above 440. But the pressure is still down on this one. We'll just have to see if that can get, maybe the buyers are starting to step in. I don't know. It's looking a bit like that at the moment, just on the last few days. So see how I go. All right. Any questions just on what we've got there, guys? And then we'll start off with BTT and then SHL. And then we'll get into, just want to have a quick look at we've got some good examples on the currency pairs of continuation versus complex correction. And then from there, we'll just open it up. You can talk about whatever you like. All right, so the first one is BTT and why we did it. What was our reasoning behind it? So if we go back to, we'll start off on a weekly. You can see that the weekly looks great. No doubt about it. We had a nice strong leg up, and this action here is probably what we're seeing on the daily in essence. Let's take it. get into there. So that type of price action where it's had a bit of a pullback, some lower highs, lower lows, but it's only in context a correction of this leg up. And it started holding a major high low, and it's just touching up there, and it started accelerating to the highs above 13. Then you've got a nice correction, major lower high here, which washed out some of a key level just above 8, say 830, which is this low. That washed down there, then it turned down. And basically, when you wash out a key level, like the anchor level to this trend up, so you got your anchor level here, which led to that move up on the daily basis. Then you got this strong move down, which washed out that anchor. Generally, it leads to a lower high, and then from there, you just want to see what happens, and that's what we're talking about, a complex correction. When they wash out your anchor, breaks your anchor level, whether up or down, then you get the lower high or a higher low for a short, and then you get that more complex correction. Then you're just sort of waiting to see how it goes, and that's more correction of that major leg up, the longer term from way down at $1.50. So you got that leg up, it has to correct sooner or later. Which is what we talk about, a complex correction with lower highs, lower lows, and then up she goes again. What percent? What do you mean, Annette? Do you mean as in what do we take off? We just look at half a position. That's basically, both Devin and myself from a futures background, and you like to trade all in. The idea is to put it, say if you're trading futures and you're trading in a number of contracts, you might trade at least 2, 3, 4. If you trade 2, you always want to jump in with 2 and then take a partial on 1 and let the second run. So that's the way we attack our shares as well. You want to take some when you've got a good something booked into a resistance level, potentially, and that's why we're looking at we look at basically half. You can do what you want. You can do it in thirds. You can take off 2/3 and let the last to run. But I think it goes on a trade by trade basis. But what a standard for us is just half and half. Let the second half run, because you never know what's going to happen. And it's not, the first half doesn't just come off and just doesn't sit on the offer. There's reasoning behind where we place our exits as well, which is probably a good one is IMD. We were looking at, say, 78, and that's the extension of that leg up. Yeah, 50% is the extension of that leg up. It takes it to 78. The problem is it's got some resistance which is just starting to hold up. So I'm in two minds right at the moment. You're starting to get a bit extended. The resistance zone is holding. We're holding around, say, the 72 mark. I just want to give it a little chance because of that last setup to target that 78 zone for a partial. Otherwise, if we just can't get through in a day or two, might just be worth taking a partial now just to lock something in, because you never know if that's a lower high, it leads to a deep correction. It could just wash us right out, stop us out, and you don't want to get stopped out with nothing on the after sitting on some good healthy gains. All right, so back to BTT. Now, you can see that chart. We've had a complex correction. So generally when you've got that corrective action there with a major lower high, so this is a weekly chart, don't forget. What we're looking at when you get that higher low, and generally basically the higher low is around 9. You've got a major higher low. And if we can draw that up, and this is the reasoning why the type of entry we used. I really wanted to make that a bit bigger, didn't I? I want to drag it and focus on just this part. All right, here we go. We got it. So we've had this move down. It's washed out this low here. Okay, then that's led to a major lower high through. We extend that out through there. Led to this leg down. Okay, so this becomes a key level. So when you break that, potentially you're coming out of this complex correction, or there's a good chance. It's really good to see these high lows. So we've got a higher low, which once you bust through this recent low, you've got one leg down, two legs down. We've spoken about this in the past as well. Generally, sellers stack in there, and then you get buyers jumping in. They get washed out when there's a second leg down, and a lot of the times it happens. It doesn't just have a major push down, and then you get this first bout of buying is pretty much tentative. To me, it's more tentative than anything else. Once you get this second washout, and then you pop back up, you're looking for the high low. Once the high low comes in, and it's confirmed through a push, just through that lower high, if this is making sense, then you know that we're coming out of that complex correction. We start to look towards the highs again and what's going to happen on the upside. So then, once we get this type of price action building, we're looking for an entry. All right. So if we can look at this, we've got that pop up, pull back. And this new leg up's just washed out that key level that we mentioned before, the major lower high. So it's definitely on the cards for a buy. We've got a major pullback. This is a major lower high, this zone in here. And that's led to this push back up, and that's got right up to the highs. It was at 13.25. So now, because we've had that complex correction, we're looking for this leg to be a nice, strong, new, longer-term leg higher. All right, does that make sense? Because of this type of price action, you can see that nice curving base. You've got extension up, a pullback, lower highs, lower lows. You built a major higher low, and then you get that sharp extension back up again. Some strong weeks. So we know when we're looking at around this zone here, this is where I think we started looking at it, we know that this potentially is a continuation. It's pulled up, we've retested the highs, we're pulling back. So if we get another higher low on a longer term basis, that would lead me to believe that we're going to target a breakout of 13.25. And we're going to get in a nice little zone where if we're wrong, we've still got something up our sleeve. So if we go down to the daily with that in mind, and if I narrow in, maybe I've narrowed too far. So that's the major high low from here. All right, so that level there, about 7, give or take. I think it's about right. Yeah, about 7. So that's the major high low, and then this is that push up through your key level on your weekly, a bit of a pullback, another major high low. So this type of price action would have been awesome. It would have been great, if we were looking at it back then, to get in. These charts are coming out all right. Yep. I might make them. I might do something. Just one sec there, guys. I might just make them thick. They might turn up better. All right, that's turning better. Let's just go there. Should have probably done this a long time ago. Is that easier to see? I've just thickened up the candles. It's probably a lot easier to see, isn't it? I can see it easy. I've got my glasses on. And anyone noticed my haircut? I expected you to say something there, Paul. It's my holiday haircut. We're going to Queensland on Sunday for 2 weeks. I'm going to go annoy Davin for a while. And then, so I thought I'd get my beach haircut on. Right, well, that didn't turn out well. So we got this... This would have been a prime entry because you've got one leg down, it's popped back up, another leg down, off an inside double top. There's all these sorts of scenarios, retest fail we call it. It's pulled back, and then you've got the deeper correction, but it's all within context to a major, that's the leg up. This is corrected. It's only retested the anchor level. Then you hold another high low, through here. If that high low holds, we know we want to be in. This is what we call an inside continuation trade. It's pretty much the same as what we've done here. Yeah. Have you shown as well? Okay, it's right here, but it's very hard to see. Let me just type it out. What am I trying to do? There you go. Does that help there? BTT. I probably can't even see that. Can you see that all right? Anyway, this is the trade we're talking about. So this here, if this was weakness dripping into the trade, you get to this period here. So a breakdown, if we saw this little, this breakdown through here, that for me, and it's got to be a good breakdown. It can't just be a little washout like that. That is a good sign that this is going to be a major lower high. We're potentially breaking, some key levels, and we're going to head south. The problem with that, the only reason I would have shorted it if it broke through here is if it broke down below the anchor level first. And this is why we talk about the anchor level. Anchor levels sort of keep me looking with the right bias, or keep me looking in the right direction, whether it's up or down. And this is why we try to get across that it's quite important, because anchor levels are your key swing levels, and everyone looks at them. If it breaks your swing level, your anchor level, whatever you call it, there's going to be a whole lot of people that want to get out and think there's going to be weakness. So that's going to bring in more selling, more buying, whatever you want to look at. So if we saw this, if this is our anchor level on the way up, and it broke down, rather than just retest it or even fall short slightly, it did fall short by a few cents. If that broke it, then my ears, I'd prick up my ears, and if I get to here, and you go, well, it's already broken the anchor. The odds are that it's going to head south because this is going to be a major lower high. And then potentially I wouldn't mind taking a short through there because you know that there's potentially that's the one leg down, it's broken, it's pulled back, and then you've got a second leg down which you're just measuring that and you're heading somewhere down here for a short scenario. But it didn't break that anchor level. So that to me is more of a, how do you call it? More of a setup to suck in a few traders, to potentially suck in a few sellers, which just brings in the volume for the long side. Does that make sense there, guys? So this is all, and it's not really, well, there's nothing special about it. You just got to try to think about the psychology behind the trades, what's happening. This type of 1-2 move, that's gonna, you got your lower high, it's going to suck in some selling. People are going to close out. It doesn't break the anchor level, so technically that's trend up, and that recent trend up is still intact. There's no reason to think that that's failing. That's our, like, sort of our line in the sand for us, I guess, is what you'd call it, and how we structure our trades. If it doesn't break the anchor, your anchor levels are key, and then you build your trade from there. Which direction? Okay, it's heading up. We know our anchor levels, what's happening, and then build your trade from there. So that there's sucked in a few sellers. It's fallen short of the anchor. Then you popped up here. So for us, I'm biased up. I'm always going to be biased up because it hasn't broken that anchor level. So you're looking for, you've got a double bottom. You've even got a little washout here. So as soon as you break to the top side, that's a nice little trade. And that's what we call inside continuation. So it's had a pullback. It's pushed up. It's had another pullback, but that's continuing higher within this move down. All right. So that type of setup is the same as what just happened here, but on a larger scale, obviously. And that led to a nice strong move higher. So that's really a base for that projection higher up to 1325. So we're really looking at the same thing here. So the reason why we got in through 12 as opposed to, you know, waiting for a major breakout, obviously that's going to be way too late. Breakout of 1325, you're giving up a lot of profit. So this is the basis of what we're talking about, is why we got in here and why the odds, we're looking for the, it's an odds based setup. You know, we know odds are when you get to this point, the anchor hasn't broken, nothing's broken technically, the bulls are still in play, the buyers are still in play, you got this choppiness through here, dragging a few sellers, and then you wash them back out. Or you get people that you've washed out previously that have sold it through here, that still like it, realise what's happened, and want to get back in again. So you got people placed on the sidelines, ready to go again. All right. If everyone's still in the trade, if it's a crowded trade, you're going to struggle to get this market moving higher. You need fresh buyers to step in, or you need to wash some out, and that's what you get when you get a complex correction, which is like this 1-2. You know, you push down, make a lower high, push down lower again. That sort of complex correction puts people back on the sidelines. And if they like the stock, they're going to have to look for another re-entry or another area to enter, which ideal was around here. Same things happen through here. If we just I'll make that bigger again and just focus in on the last bit of price action. Is this making sense to everyone? So when you look at it in respect to this, the anchor now is way down here. It's a major anchor. Okay, that's the major anchor. So you've got this leg up. You know, that leg has got a lot of room to correct from 950 up to 3. So it's got to, say, $4, $3.50 to $4 to correct and still hold the trend up. So then you see this one lower high. That's going to bring in a bit of sellers, and you got this type of price action back down. So you got this lower highs, lower lows. All right, so you know that that's washed out a few people. When you get this sort of complex, it's finally broken, and that's the key for this leg up here, this little anchor level here. Once you broke that with the first move down, then you go into complex correction territory. It's always easier in hindsight. But this is how you want to go about trying to analyze the trade. You know, first is look at your anchors. Where is your anchors on your weekly and then your daily? Are we coming close to a weekly anchor? Are we coming close to a daily anchor? And just try to build your trade. And then look at it. Okay, everything's still intact. The weekly's up. The daily's maybe in pullback mode. It's correcting, complex, whatever it is. And then look what's going to happen. And then once we got onto this trade, by the time we were looking at it here, it's built that higher low, which it did. We just spoke about before. You saw this, and it started to break up out of this correction lower. So for me, that's a nice turning point. We've got confirmation that buyers are stepping in at higher prices. They're starting to step in. It's pulled back enough for them, and we're starting to look like we're going to continue higher. So really, that was a beautiful little level at 12 bucks. You know exactly where you're going to put in your trade. It's pulled back to the MAs. It's a reversion to the mean that Davin talked about before. We've talked about it in the past, I think in one of our streams. It's pulled back to the MAs, and we want to see this trade start to accelerate back up to the highs again. So initially, if you're going to buy it on a major breakout, which I don't think that's what you were mentioning, Paul, through here, you can already see we're going to be up quite a bit before we even get there. And this is on the... just turn that down. Sorry guys, just will be 1 second. My mobile's going to go in a second. All right, we'll turn that off. So, does that make sense what we're talking about here? So we know and this is just built on a few fundamental rules, how we build our trade, how you structure it, and then what you look for. You're trying to build the picture and then drill it down into an entry. And once you've got all that working up, sometimes it's quite easy. Sometimes it's a matter of just glancing at the charts. You can see quite clearly if they're in an uptrend, downtrend, sideways, whatever. I tend to like these complex corrections, and they go back into acceleration higher. So I feel that we're getting best bang for our buck. We know where to... I mean, this here, if this goes well, it's going to be a 2-to-1 trade before we even, once we get up to that resistance zone. And potentially that's going to go, if you project it from this low to the high, projected that from this low, it's going, quite a bit higher. The difference is probably about $2, give or take. Yeah, 240. So it could go, up to 13, 14.70 thereabouts. So it's going to be a good 3-4 to 1 trade if it hits at that target there. All right. So that's one. That's one of them. That was probably a bit more talking than I wanted to do on that one. But I hope that makes sense. And we like these type of setups. And it's only an inside continuation when you start breaking out. This is what we call contraction. The market expands higher, then it contracts lower, still holding the anchors. And then you're looking for that next area of expansion higher. Yeah, pretty much, Paul. So we've got, if we just go back, so we've got this. This is the daily. I always just flick it back to the weekly. See what's happened on the bigger picture. Okay, we know we've corrected there. That's more your complex correction. It's washed out a few buys. Then we start building this higher low. So for me, we're going from contraction down to expansion higher. Don't know where we're going. So of course, start to flick it down a trade, down a chart, and try to look for the entry. And then we've got the same type of price action on the lower scale. Expansion higher. It's market's contracted. We got a higher low. We know that this is coming from contraction into expansion again. So expansion would lead us to believe we're going to maybe, even if we build a lower high, we still got something up our sleeve. It just means that we're putting, probability on our side. Yeah, you can sort of analyze it a few different ways. I tend to take that, we call them the volatility projection, from the low to high. So that was the most recent leg up, if I'm right, and this is a new leg up. We sort of take that leg up, project that out, and have a rough target of where we're going to aim for. It's not hard and fast rule, but it's a rough rule. I'll show you something on the currencies, the same type of methodology. And it pretty much, when I sent out the currency review, if anyone watches that, the FX review yesterday, it was to the T yesterday, so it looked great when I was sending out the alert. It's actually gone a bit higher. Now, the next one is SHL. So I'll get a call you later on too, Paul. I want to thank you for a few things, and then we can have a further chat about it. Now, what do we got here? This is SHL. So this is our... So we just flick it back down to the weekly. All right, so this is nice structure. The weekly's up. You do get those. That's the complex correction we mentioned. And it's a complex correction. And when you take out... So that's the leg up. You've got your higher lows, higher highs. That's your most recent higher low. Moved up here. Then we broke that higher low. That's your anchor level to this trend up for continuation. Complex correction. So we're looking for that higher low again. The same as we just spoke about. And that's, we've had that pop up, pull back, build the higher lows in here. That's led to an acceleration higher. That's led to acceleration higher. We've just washed out the most recent high. So that's, again, contraction into expansion. It's expanded high. Didn't get much past those highs. Had a pullback. And then we got this beautiful price action through here. Buyers are stepping in. They missed it. Maybe missed the boat here. It hasn't gone too far, hasn't got away from them too much, but they've had a little correction here. You're starting to buy around that 21 to 21.50 mark, or even 22. So the buyers are really stepping in strong there, supporting it. You found a nice support at 21, and then we've got that acceleration higher. All right, and we're just into new highs now. So I think the question was whether it's worth buying it up here. You're into new high territory. My short answer would just be, you know, you can. This leg is well underway at the moment, so it's nothing, like we say, yeah, Annette, we don't send the entries as such. We're going to, if anyone's liking the FX, or if you know someone that does, we are going to start to get into it. We want to start sending alerts where we've got entries and exits. At the moment, we're just discussing more of what we feel is going to happen. And if you follow our sort of methodology with higher lows for entries, you can always, you know, drill it down to get you right. It's just putting people in the right track, I guess, whether it's going to be, whether we think the market's heading higher, it's going to wash out people and then head higher or head lower, what our bias is for, you know, a few different currencies, what we're looking at. We'll flick through a few in a second. But it's just that, the FX report at the moment. And then, like I said, we'll start doing more regular FX alerts where we give a few different entry zones, which where you want to be long or where you want to be short, you know, when you want to buy, where you want, what your risk is, and so on and so forth. So SHL, like I said, this is well underway. If you're buying up here, you're buying in the known, you're not really buying in the unknown. And if we just tend to get like this high, we only just punch through the high a little bit by, say, 50 cents, 40 to 50 cents, like this one did, and then correct, you're going to get washed out. And we potentially are close to 40, 50 cent mark. So what's that high? 24.16. 40 cents takes us to 56. We're not far off that now. 56 to 66, say 55, 60. If you're getting up there to 24.60, you might be viewing, well, I would view this leg as starting to get a bit extended. We're a bit overbought. So for me, I wouldn't buy yet. I would want to see maybe a bit of a complex correction of this most recent leg up. Does that make sense there? So that's the reason why I wouldn't touch this just yet. All right, just bear with me 1 second there, guys. I've just got to quickly deal with a little girl. But just think about what stocks you want to chuck up in a second. All right, back, guys. Well, that was a bit of fun. GXY, yeah, we'll take a look at that in a sec. Alrighty. So that, I think that answer was that was a U net, wasn't it, with the SXY going well. So we're going to be raising stops, exits, probably somewhere around 23.60 now. We've taken a partial, like I said. I think we took a partial on that one. 23.90, so just below 24 here. So I'm happy just to start, and you can probably see that in the alerts. When I'd rather give it a bit of room when we think we're at the start of a leg higher. When we think we're starting to get a bit extended, I'd rather tighten things up, tighten the risk up, just to lock a few more things in, a bit of more profit. So we'll see how that one goes. Now just click it over. I just want to talk quickly about complex corrections, and the pound. It's probably not a bad little example of that. So this is the pound here. Complex versus continuation trade. So continuation trade is when, I just want to draw it too. A continuation trade is when the market's going like this. It's going higher. Now I just want to, and when we're, you know, when you've got a leg like this, say this one's on the downside, I know that's probably, or anyway, reverse of that. When the market's going high, you've got your higher highs, higher lows, and that is considered one leg up. All right, so a continuation trade is you buy on a pullback. You're looking for a little setup, buying on a pullback, buying on a pullback, continuation trade up. Now, a complex correction is what we just mentioned when you break, you potentially just break an anchor level. And so this, well, that didn't really work out too well. That there is our anchor level. Still trying to get used to these drawings. Let's just get rid of that and we'll start again. Here we go. Okay. So we'll say that's our anchor level. The market's extended higher. So at this stage, someone wants me. That could be my wife. Funny enough. All right, so you've got that. You've got your higher highs, higher lows. You've got your continuation trades. So when we talk about a complex correction, you either you're looking for a complex correction when you get a lower high. Now, there's two ways what we just spoke about. If they don't break your anchor, be wary that you're not going to get sucked into a short. Or a complex correction, we turn that more when it's breaking the anchor. So if it's broken that anchor down there, and then we might get this type of this move. All right, so that's your basic structure. So if we're talking, maybe just want to draw that out a bit more. Why doesn't that work? That's just dumb, isn't it? Anyway, I stuffed it. We don't have to worry about that. Whoa. Whoa, don't know what happened there, guys. Let's just pretend there's a leg up there. So you got, this is the major leg. All right, it's got holding higher lows, so that's your key move higher. We've had a complex correction, so lower highs, you've broken the anchor, and then from there we're looking for it to expand higher again. So we call this contraction when we get a complex correction, as opposed to a continuation trade. So on a, if this was on a daily chart, which is what we look at, but the weekly would look very, this could just be a pullback on a weekly. So you've just got to remember what context you're looking at and where you're looking at it and why. All right. So this is, I just want to point out, on a daily chart we could be in a complex correction, but on a weekly we're looking for a continuation trade. Does that make sense there, guys? So if we look at, say, examples here, this is a daily chart. So on a daily chart we've got the move down. That's on a weekly chart. Sorry, we've got a move down. We've got a pullback, so we're looking for a continuation trade like this on a weekly chart. And we've got the next leg down, pullback, next leg down. All right, so, but when you break it down to the daily, you've got this one leg down as push down, pullback, push down, pullback. So you've got lower highs, lower lows, lower highs, lower lows, up until we get to this point when we go into a complex correction. We break the anchor for the leg down, correct, get our lower highs in here, and then we start to accelerate down again. Does that make sense? So we're looking for a weekly continuation trade, and it's a complex correction on the daily basis. So you just want to put, sometimes you get to a trade, you look at it and you think, oh, this is looking okay on a weekly basis or on a daily, but you've got to, the weekly might be down, the daily might be up, and you might be buying into it and realize it's actually not that great a buy. But when you get it coming out of a weekly, so you've got a weekly continuation trade, it's going in your favor, starting to roll back up, for example, then buy on a daily chart. Just bear with me 1 second here, guys. All right, does that make sense there, guys? So this is a great little example. At the moment, we've got, you know, the pound. We were looking for a short squeeze on this one, but we've got to be wary that our key levels, so this is the longer term's heading down, we're contracting, whether we're contracting or we're going to break. So the key level is up at 134.56. So we're looking for that basically short squeeze of continuations. We've got one leg up, another leg up, maybe take us to 34.56, but we'll have to see. But that's the premise. So we've got, on this one here, we've really got to be careful that we're not just going to continue lower. So the longer term trend is down, the short term daily trend is contracting higher. So we just got to bear that in mind with our trade. So we haven't got the weekly on in our favor, but we have got the daily structure pointing quite nicely. So if you break it down to an hourly chart, there's heaps of trades in there, but it's a good thing to note what sort of biased you are on different time frames. So if you get them all lining up, fantastic. If they don't, you just got to be careful. I doubt it. That would be interesting, because if it was Lotto, I haven't even taken a ticket, which is so this is a bit different. Let's just look at the US Swiss. Now, we were biased down on this one. You can see that that's projected down, so that the longer term trend, you can see, is quite easily down. You've got expansion, contraction higher, expansion lower, some contraction higher, expansion. Didn't quite get there, had a bit of a pullback, retested the anchor, expanded lower. So we're looking for just to go with the flow of that longer term trend. So we started looking for a short just in here, because I thought this was a great level. Your key level, anchor level to the longer term trend down was 98.09. We're looking for a continuation zone on that longer term trend. Then we just got to look to the daily or the shorter term time frames. This is the 4 hourly for some lower highs to start coming into play and failing to go high and start breaking those, the anchor level, which was just in here, the anchor level to the downside. We broke the anchor level here. Let me draw that. So breaking that anchor level in there, it's pushed down, pop back up, build the lower high, and then it's on for Young and On. It's just gone through, so it's just taken out 96.12, and then it's turned out to be a beautiful trade. But does that make sense? What I'm trying to just get through with the complex corrections and then what you are in different time frames. That's why it's important just to flick through a couple of different time frames to get a bias in each level. And if you just put on paper, weekly's up, daily's down, okay, just hold off. Is it a complex correction on the daily, and we're looking for a nice little zone on the weekly to trade, or is the weekly up, the daily up? Okay, it could be a continuation trade we're going to look for. That sort of scenario, it just gets things a bit clearer in your head, and you're not going to get caught buying on the daily, forgetting what the weekly's doing, and then finding out that it's coming. You're buying straight into some strong resistance, or straight into a zone where it's going to roll over, and then you get caught. So that's just another, it's another way to put probability on your side. All right. Someone's not getting a hint. There's two numbers to call. They could easily call the other one, so we'll see how they go. All right, so we won't get onto these anymore. This is another euro pound going quite well. We've been biased up on that one since about this zone in here, going beautifully. Euro yen. Oh, this is what I was mentioning about trying to project your levels out. This is the one, so we projected that level up there, then we got some complex correction down off a higher low. So you just take that level from low to high, project it out, took us to 127.50. And we were looking for a long in here, and then it's popped up, especially after that support, that bit of a washout you can see at 122.65. We drilled down that. That was ideal. I wish that would go away. All right, that support in there, wash it out, high low here, beautiful trade. That was that was on a daily too, so there's a lot of room to move on that. So that's where we use that volatility projection. Now that's just gone on a bit further, so it's just given us a rough idea of where to exit. You could just ride this trade, go to the shorter time frames, and this is where it's good if you take a partial off, leave a small part to go, and just follow it up. All right, let's get into so what have we got to look at now? We've got GXY, Galaxy, not looking good. No doubt about that on Galaxy. We were looking at it. And this would make sense to you now if you can understand. So you've got that first leg up, complex correction. So it's gone from expansion, contraction. Well, that zone there would have been a beautiful one to buy. If you drill it down to a daily, just on here, that was actually, we did buy that in there, I think, a long time ago. So we bought it somewhere in here, took a nice little gainer on that. Ideal zone to buy it, and you can see that it's trying to go lower. Traded just through the most recent anchor level. Pull back, high, low, you break through that high, you know where your risk is, you know that potentially you're putting yourself in good stead for a continuation high. You're going from, excuse me, you're going from contraction into expansion. So that's what we're looking at there. Turned out beautifully. So back to the weekly, that was that leg up there. Pull back at this zone here is where we were potentially looking at another zone on the weekly to be that higher low to hold. That was in here. And to head higher. So if anyone that knows, if we just draw this up, and this is a great example of following your rules, not trying to second guess yourself. Following your rules, your setup, and sometimes it gets you in the trade at the right time. Sometimes it keeps you out of trouble. So on Galaxy, you've had that move down. We were looking at this, okay? Support through here, you can see that. It seems to have popped out of contraction lower, so we're looking for expansion. The weekly max up, higher low potentially than here. All great. So at this stage, we got that pop out. As everyone knows, we get this move down. We look for that, you know, oh, how can I draw that? Push up out of expansion, then we look for a pullback, and we look to buy off a higher low out of expansion on the continuation. It didn't do that. So this has kept us beautifully out of trouble. So what we should have been looking for here is maybe this top of price action and then buying through the high. You know, that's a higher low. We're going from contraction into expansion. We've got another leg up. We're gunning for those highs. As it played out, it just continued. It failed, and it's come all the way back down to, you know, near that support around that $1.50. In essence, I wouldn't go near this just yet. I think it's got to do quite a bit of work. On the short side, it could have been a short through here. But again, that wasn't a strong short for me, really. And you can see it, just that last little point that I talked about. That's your anchor to this leg down. Anchors down, pop back up. That's tested it. You broke the anchor too. So there's a few things for the long side that was working in our favour. We just wanted to see that higher low build and then start to expand up. It didn't happen. So that our technique and our rules has kept us out of that trade, which is great because it's just capitulated from there. So yeah, ideally I wouldn't be going near this. You've got to, just for me, you know, you're coming down to this support zone in here. It's got to do a lot of work for me. It is getting it a bit extended to the downside. Potentially you want to see, we're going to the daily again. What I would like to see, I'm not giving any advice, of course. What I would like to see is you've got a major support zone there. I wouldn't mind seeing it, you know, if we're here, wash it out and then start to build, retest it, and then start to build some high lows. And then you want this leg down to be broken. And the problem is your key level's way up. It's way up at $2.50 at the moment. You want to see that start pushing out of this contraction lower after a retest, probably a washout. So I just want to see some work done. I want this to prove to me why I should buy it. Does that make sense there, Nisha? Next one, IAG. Tell me if I'm yelling into the speaker too, by the way. IAG looks good. Look, that's if you just step back to the month, well, best fit. That monthly, you can see it's just projected into the highs now at 7. I wouldn't buy it just yet. Don't forget this is a monthly. You've got a lot of room to move in the monthly. It can go up, you can sell it. I mean, you could be going down, you could buy it and make heaps of money. It's always good. So just remember what context we're looking at. That time frame, oh yeah, to push lower, failed to get down to the lows. This is way back in 2012. Had another leg up, straight up to the highs, around 660. Had a pullback. That's a complex correction. It's just washed out this 540 zone and then started building higher lows again. So dropping it down to find out what's going in here. Drop it down to the weekly. Nice higher lows, starting to take out these, you know, lower highs in here. So we expect it to go into expansion from contraction lower. So again, the same sort of rules, just rinse and repeat. And we have got that. You can see that's quite clearly now. And that daily trend has been higher. So just remembering we're coming up into a key zone. I wouldn't buy this one either. I mean, I could be completely proven wrong, but I think the odds are not in my favour just at the moment if I'm looking at this. Because you're going straight into those highs at $7. This could easily back and fill, meaning pull back. May build a higher low, so in the longer term you might be fine. But this is not the sort of trade I would go for. I would ideally like to buy it, you know, in a zone like that where you're gunning, you're looking for continuation higher. You're just gunning for a new leg up, so at least you're buying it in the unknown, not in the known. All right, does that make sense there, Annette? ING, let's quickly look at that one. ING is a bit the same, isn't it? Oh, that's all the data. So we go through it left to right. You know, it's opened up, it's pushed down to somewhere around $3. Made new highs right up at 346. Washed out those lows, come all the way back down again to about, that was $3. All the way back down, pushed back up. Looking negative here. You know, when we got that lower high in context of this one, but then it built a higher low. So that's, and then in here would have been a great little zone to potentially buy that in there on a break up. So you're looking to work off that higher low And then your first target's obviously going to be up at 330, and that's just led to a nice leg up. So we've just pushed up through those highs at around 346 with a move up to 349 yesterday. I would just be a bit tentative because you can see this is where the legs come from. So that's, you got to look at what leg, where we're at each leg, what sort of stage of the cycle we're at, and you can see that that's moved up, built high lows, high highs. So this is, we're definitely not in the unknown at the moment. Everyone knows this is going up since pretty much a good part of 2 months. And you come into a resistance zone, maybe that's a washout, we don't know. I would like it to have a bit of a pullback, a decent pullback, maybe something like this. Build an inside high low, like we said on, was it BTT? A continuation trade like that, and that's what we talk about. So that's moved down, built a major high low, popped up, pull back, build an inside higher low, which is, I love it. And then you got that inside continuation, break up through here. So in essence, you expect it to break the most recent lower high, which is that one there. Does that make sense? So I'd like to see that type of thing. Decent correction, put you in a good zone. Decent correction like that. Just to wash out a few traders, put them back on the sidelines, up into the highs. Anyone who's bought it through here is just happy to hold. A decent correction might wipe them out, as in wash them out of the market, put them back on the sidelines. Not wash out, sorry, not wipe them out. That's a bit extreme. But that's sort of what we're looking for. At right here, I think you're going to struggle to get the buyers to, if you bought it here, I think you'd struggle to get further buying to just continue higher. Could be wrong, but for me, that's just, like I said, not a high probability trade just yet. Definitely something to keep an eye on though, because they're moving in the right direction. PRT. Is this not one you had there, Don? It may be. Just wait for your answer there. For me, that monthly's not looking the best. I mean, it's probably pretty clear why. Goody. That's great. I don't, just looking at this monthly as a chart, I don't like it. It's in potentially a zone where it's coming down to, you know, zero, obviously, from being way up at 360. Got absolutely belted down here, contracted higher, and started to sell off, made new lows. So obviously on the, we're just going to check out what's happening in the lower time frame charts. The weekly is not looking strong after this move down. It's just, you're not making, if you want to buy it, I mean, buying it here is, you just got to remember what's happening. Okay, from a good part of 6 months, yep, 6 months, this last 6 months, if you see it on the daily, it's working its way higher. That's great. Okay, so if you looked at this chart, okay, we want to pull back, buy it on a higher low, something like that, like that, like that, buy it on a higher low, let it push up. But in context of the weekly's down. So this is what we mentioned before. One's down, one's up. I'd be looking at this saying, okay, it's had a moves high, but it's not, the corrections are too deep for me. This is not buyers starting to take control. It's more sellers just holding off, letting it get a bit higher because you're making higher lows and then coming in another wave of selling potentially to take out these lows again. I don't know. And the good thing is it's had this massive move down. It did that. It's already flushed out, brought in some buying, flushed it out again. So potentially we're doing it again. But the thing is that we're well and truly extended on the downside. Does that make sense? So it's not like you're up at $3 looking at this type of price action. Then I'd be really nervous if I bought it. Because if it was up here, you had a pullback and then you're getting this sort of grinding higher, I wouldn't go near it because I expect a second leg higher or another move lower. Problem, the difference is we're way down. And that there's been a lot of selling that's come through the market. Buyers have started to step in here. They've lost the battle, and now we're grinding higher again. But this price action is not. We're well and truly. So we've got 1, 2, maybe 3, 4 higher lows and higher highs, and we're up at a higher high here. I would like to see a deeper correction. I'd like to see it test down to one of these levels, then start building again. So on a weekly basis, make a higher low. That way, I'd be much more confident. Yeah, look, I could be missing something completely on the fundamental side of it, which is fair enough, which I tend to do a bit. Overall, the daily looks great. Again, forgetting about what the weekly says, I probably wouldn't buy it just yet. I want to buy it on a pullback, hold a higher low. You know, with a bit of confirmation. There's your inside continuation trade again. Can you see this just before it's popped up? You know when you're right there, they're a nice strong signal because they just lead to when you get it right, if you get popped the upside, if the market's positive and you've got every analysis right, sometimes they can lead to some really strong moves up. So you're proven correct quickly. All right, we might have to just knock it on the head, guys. I've got to see who's making the phone calls, and then I'll probably finish it up there. Now, Monday, I don't know if I'm going to stream. I don't think I'm going to stream during the day, Monday day. We've got to talk at night at 6:30, I think it is, if I'm correct. We're going to be talking then, so we'll wait till then. So no stream during the day, but we'll be back in, and I'll probably do one on Thursday day, 12:30 again. So thanks for joining me, guys. Look forward to, if not seeing you Monday night, again on Thursday. But thanks for joining me, guys. We'll speak to you soon. Cheers, bye.